I'm looking at the top holdings. More than a third or five of the Mag 7 names, NVIDIA, Google, or Alphabet, I should say, Amazon, Microsoft, and Meta. Are you sold? Are you sold after last week's performance, especially where the Mag 7 gained 5%, that this is where you want to be in the equity markets? Have you just shaken off any concerns about concentration risk?
Good morning. First of all, I think, the Magnificent Seven is a term created by media, but it is certainly not a monolith. And we believe that this is a stock picker's market here. These companies differ very much, not just in terms of growth rate and valuation, but also in terms of capital intensity. That's really important. You have NVIDIA that employs 22,000 people, and Amazon that you mentioned that report this week that employ 1.5 million people. Capital intensity is very different, growth prospects, but they all do have very strong free cash flow profiles. But we're very stock selective in terms of the Magnificent Seven that we own and have in that top 10.
All right, so you're very stock selective. You're mentioning valuation. So I did a little research. Tech right now trading at 26.5 times forward PE, consumer discretionary, where some of these Mag 7 big tech names are housed, at 24 times forward PE. The S&P at about 20 times forward PE. Is that too rich for what these companies provide? Supposedly higher productivity, of course, exposure to AI, and strong earnings, in your mind?
Well, first of all, you have stronger than average balance sheets. When you compare these to many of the large cap consumer staples names, these companies are very early in their capital allocation journeys in starting to buy back stock. We've seen Meta in January and then Alphabet last week follow suit in just starting to introduce a dividend. So you have very strong balance sheets, no pension liabilities, and superior growth at these companies. And also, I would really note that, over last quarter, and we expect to see that again this quarter, we'll see these companies really focus on margin opportunity. And we think that some of the restructuring efforts that were made last year can really start to bear fruit with better than previous operating margin leverage from these companies.
Okay. So I want to hit on the two earnings that are coming up later this week. Let's start with Apple. Obviously, some concerns about China weakness, but overall, what are your expectations?
Well, we're long-term investors. Apple's a wonderful company. They've led in many of the past compute waves from with the Mac, with the mobile internet. And in this AI wave, they're never first, and they do tend to be lagging. So I think, this quarter, generally, the focus, as you mentioned, is in China weakness. But we think investors will also be looking out beyond this quarter and really thinking about when Apple is able to provide some compelling devices that can integrate AI and really position it well for this next AI wave, which up to now we've not seen so
Okay.
far. And I think that will really be out to June before we see that.
Okay. Also, Amazon reporting later this week. What are your expectations there, not only for its cloud business, but its ad business that's become increasingly important for all these mega cap tech names, and of course, its e-commerce business?
Yeah, so three big drivers, and Amazon has a great positive mix shift benefit because those
Right.
higher margin businesses are growing faster. We've seen from both GCP, Alphabet, and Azure an acceleration in cloud services. So we'd expect to see some strength in cloud. Advertising businesses also, we saw Meta grow slightly faster than Alphabet. So we think that we should see some strong momentum in advertising. And also we expect to see really strong operating margin leverage coming in the retail business, and that e-commerce business, and operating margin leverage can also be helped by that leverage in the advertising business.